This is Mark the Meerkat with Grok Trade with the weekend review here. The Bears are back, folks. The Bears are back. This is Mark the Meerkat in for D7, who is out of town this weekend, so he asked me to take over for him. About a month ago, I did it as well, so it's kind of interesting what has happened in the last month. The biggest thing that's happened is Jackson Hole announcement. That's right. Last Friday, a week ago, at the end of August there, they announced that Powell talked about maybe, you know what he did? According to the Investment Business Daily, the feature article, it's a really good one here in this weekend's paper, and that is that he destroyed all hope of a soft landing here. Nope, he said we're going to take what they called an emergency landing. That's right. They're going to be full power here to get this inflation, unemployment, and under control, or I should say employment shortage, not necessarily unemployment problem. So that's what's going on here, and let's take a look at what the impact was on the markets. So let's take a look here at the daily charts first here on the SPY, the S&P 500's ETF. Look at that, Jackson Hole hit, and then bam, just fell right down and continued to fall all the way down here. And then on Friday, it opened up nice, and then no, it's not going to happen. So the bears are in control here, folks. And look at the volume. We had this really nice summer rally here. And in fact, when I did it a month ago, we were stalled right here at this area of support and resistance going back. And it did break out from there, and then it came back, was starting to do a bull pullback, but no, bam. But that was on relatively low volume, if you look here below that 20 moving average on volume. And now, when it started to fall, boom, look at all that volume coming in. That is lots more bearish. All right, let's take a look here at the DIA, which is the Dow Jones Industrial Average ETF, right? Jackson Hole hit, and 1,000 point drop on that day. Again, the markets were believing we're going to have a nice soft landing, that things were not going to be really disrupted. Powell kind of destroyed that by saying we're going to be basically aggressive here. All right, then it came down here, and it's bouncing back up here on Friday. Same thing. It went up. It opened high and then fell for the day, 1%. Then we got the QQQ, which is the NASDAQ 100 ETF, and a Jackson Hole hit. And again, it was right. It was resting. It was doing bull pullback, stopping right at this area of support and resistance. Bam! Increased volume. And this all cap Russell, it too. Look at that. It had already bounced off of this area of support and then fell. So how about Bank? What's Bank doing here? It is not immune in Bank there. Look at that. It hit its 200 moving average here. It was starting to do a bull pullback, Jackson Hole, and then bam. In the financial sector in general, not just the banks, it's also doing the same thing. So most everything is on the drop. We're going to check the sectors after, because we did finish the month. This is the first weekend of the month, so we'll take a look back at what the month of August charts look like as well. And how about that VIX? We were down here when a month ago here. We were right here at the 20 level. Just, this is supposed to, we get below that, we're more quote unquote normal. Not going to happen. Boom! Now we're up here in the 25, 26 range. Again, high volatility makes it extremely difficult to do swing trading in particular. And in this down market here, you just got to be really, really careful. All right, how about gold? Just a quick look at gold. You know what? It is not the retreat that it normally is when we have high inflation and or down market. And the safe haven, or silver, look at that, bam, 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 and it new lows here for the last year. And then oil is, after it hit its peak here back in June, it is now doing what? This is a descending triangle. Well, here's this area of support and resistance here. Take a look here. Let's just draw that in here. This area right here. Oh, and the 200 moving average too. So yeah. Oh, come on. There we go. So we've got this area right here. It keeps bouncing off of this area. Don't know what that relates to as far as on a per barrel basis, but yeah, it's not dropping below there. So what's going to happen next? Yeah, now we're coming into the home heating oil season. Folks are going to be just blown away In England, their home heating bills, they're expected to go up 90% for this winter. 90% in England for their home heating costs, and businesses as well. They suspect that up to 70% of the pubs in England are going to go under because they won't be able to afford the heating bill. Amazing, right? Things are going on, aren't they? All right, let's take a look here at the weekly charts now, and what's going on in that area. So we'll start out with the S&P 500 here first. It was in a falling wedge here. It broke out from that there in July, and then it was on its pullback, and then kabam! Look at that. It's definitely down there, and look at the volume, increasing volume as it's falling. That's more bearish. Dow Jones Industrial looks very similar. Went up here, hit this 50 moving average, and then fell. Now it's below the 20 moving average. SPY, let's go back here. Yeah, it too. It tagged a 50 and now below the 20. The QQQ Nasdaq went up here, hit the 100 moving average, didn't quite get up there, and then fell, bound below the 20 moving average here. Again, increasing volume. And then the small cap Russell here, it had a beautiful run up here, and then on the weekly, hit that 50, and bam, now below the 20, now approaching its 200 moving average. Possible support area. It was support, resistance, could be a support area or not. Okay, and then yeah, let's take a look at bank on the weekly chart. Same problem, tagged to 50 and is right below the 20. So the markets are very, very consistent right now as far as what support areas and that they were following, or resistance areas, and then fell from. All right, now the monthly. We are at the beginning of the month here, so let's take a look at the monthly chart here on the S&P 500. We are a bit in a symmetrical triangle here, and look at this. Now you cannot count this one here. Do not count that one right there. Reason is it's just 2 days. So this is the month of August. So what did it do? It opened up here, ran all the way up there, and then by the end of the month, kabam, ended up being a losing month. So that's pretty darn bearish right there. Okay, we do not count this one again. That one's only 2 days worth of there. But it is at this support line, which goes back several years. Look back to 2012. This support and resistance line here, and it danced around it, and then it closed right at it here at the end of August. We'll have to see if this is going to be an area of resistance or support now for the monthly on the S&P 500. Here's the Dow Jones Industrial on the average, and can we look at the retracement here? It had from its all-time high, it pulled back here right to the 38.2. Oh, all right. Clock is going off here. We're reason I'm doing stand up here today and don't have a screen behind me and all that is my house is completely wrecked right now. We're going to be redoing all of our hardwood floors here, and starting on Tuesday. So we got, this is here in the trading room. I've got all kinds of furniture in here, including the grandmother clock in the background that just went off. So yeah, sorry about that, but that's we the show must go on here. So it did pull back here to the 38.2, tag that here 3 months ago, and then it's been resting on top of its resistance line, and it closed just above it. Same problem though, it opened up here, ran up, came all the way back. And the QQQs similar, except it pulled back here to the 50% area, on the Fibonacci retracement, ran all the way up, open up here in August, ran up, and then bam, came back down. Can I count this one? That's only 2 days worth. And a small cap Russell here, it pulled back also to the 50% range of the Fibonacci retracements, and it wicked all the way up and then back. So it is too looking bearish here. All right, that's it on those. Let's take a look here at the sectors. We are at the end of the month here. So you go to finviz.com. Let me readjust that there. There we go, finviz.com, and it gives you the it gives you the daily. Look at on Friday. The only thing that was green on Friday was energy and then basic materials, just barely. For the week, everything was down. For the month now, energy up 8% for the month. So there are some sectors that will be performing you know, even in a down market. So you have to be very sensitive to what the sectors are. Again, you know, if the river is flowing this way, it's very hard to swim up that way, very hard. And you can, it's just a lot more difficult. So be conscious of that, especially if you're an account you can only go long on, that you cannot short. All right, and then the 3-month performance here, we got the cyclicals and everything else, but energy is way down here over 3 months, so it is shifting back, and things, the different sectors are shifting here very quickly. Half-year performance, energy and utilities are number one over the last 6 months, and then over the 1 year, energy outrageously up 43% in the last year on the energy sector. Wow. And then utilities under that. So looking at the longer term over the last year. But this is a very, very short-term market, very, very sensitive to all of the short-term news. It's hyper reacts to any news at all. But of course, this Jackson Hole announcement really took the winds out of the sails of those that were hopeful that we were going to be able to have a soft landing here on this recession. And it looks like now we're going to have to go into recession to fix the this hyperinflation that we're in, as well as the shortage of employment and of housing. This is Mark the Meerkat. This has to do with not trading but investing. If you are invested in solid companies, instead of the don't ask and don't tell policy, when we're in a down market, it's don't look, don't sell. Trade well, and may your winners run.